Let's understand a little bit more about the business outlook then from Shriram Finance, talk about the implications of the tighter lending norms and the rising scrutiny on NBFCs. Umesh Revankar is the Executive Vice Chairman of Shriram Finance and now joins us on the show. Thank you for taking time out, Mr. Revankar. To begin with, given that the RBI issued these regulations with respect to the increase in risk weights recently, for an industry as a whole, help us understand what is the extent of the impact.
Yeah, thank you. By and large, I feel the cost of capital would definitely go up, and resources available can come down to the industry as a whole. But depends upon the NBFCs. The NBFCs, which are basically into asset-backed lending, they may not have much challenge. But the NBFCs, which have modeled on the unsecured loan, may have a certain challenge in raising resources or even cost of raising resources. So it depends upon the individual NBFCs. But as an industry, I feel the NBFC will have alternative option of raising resources from other sources. So even if there is a increase in the cost of borrowing, the credit growth should not suffer by and large because the markets are good, the demand is good, and only the consumer loan or maybe the unsecured personal loan can have an impact which can bring down a consumption to some extent.
Just when things were looking up for Shriram Transport Finance in terms of NIMs, in terms of spread, in terms of growth, you got this RBI decision. Could this really have an impact on the near-term visibility which you shared with us? Would you be forced to, let's say, revisit your numbers and guidance?
Overall guidance, I think we don't have to really change now, because if you look at the guidance given in the beginning of the year, that we had given a NIM expected level of 8.5, and we have exceeded that by doing product mix, by having products which are high yielding products, and that's where the quarter Q2 had a better NIMs, which we are confident of maintaining above 8.5, which is the initial guidance.
But you're just trying to understand this move and how it impacts businesses like you, Mr. Revankar. Given that a majority of your loan portfolio is backed by assets, considering your borrowing mix versus peers, there could actually be advantage for you, right?
I don't really want to talk about advantage, but we are, I think, reasonably on the safe foundation of always having a diversified sources for our resources. And that has been our philosophy right from the beginning. And also we always have a tenure matching borrowing. In the sense, we don't borrow short at all. So I think we always play safe in that way. So there is no surprise to us.
Okay, now to understand how the sector is likely to move, given that the Q4 is always the strongest quarter for the truck financing business per se, how do you see Q4 of FY24 different from Q4 of FY23?
I don't really see a big difference. The only difference could be the election. Because there is likely to be the election around April, May, and since the last quarter, Jan to March, will have some impact of election campaign. There could be some slowdown in the infrastructure capex, is what some of the analysts believe. But our record says that even in 2019, it did not happen. So the government is likely to continue with the infrastructure capex. And if that is continuing, I think it is going to be very good for the overall commercial vehicle industry and construction, both.
Your partnership with Paytm, Now that's a very unusual partnership because you are in truck financing. Paytm is more like a consumer focused company which does B2, which actually does P2P lending. Why have you come together with Paytm? I doubt that a truck financier will ever go on Paytm and actually going to take a loan for a second-hand truck.
Please remember that now we are a multi-product company. We are no more focused truck finance company. The truck portfolio in this new merged entity is 50%. The passenger vehicle is 20%. And the SME portfolio is around 11%, which we intend to grow. And we believe it is quite a large opportunities available in MSME lending. And Paytm has onboarded more than 75 lakhs merchant on their platform. And we feel that lending to SME through that platform, where we get the credit history of the individual entrepreneur, is very important for us. So we therefore are focusing on the individual entrepreneurs and the micro enterprises. That's where our focus is. We are not into unsecured personal loan on a Paytm platform. So the intention is to grow our SME book.
Thank you so much for joining in and giving us an all-round view of the impact on the company and the sector as a whole.